Hello, how to swing trade without fancy tools or hype. All you need is having your brokerage account, and if your brokerage firm offer a trading platform, that's great. You want that trading platform and you are just going to be using trend lines. Excuse me. So we are going to look at 3 of our stocks from our watch list and practice with those. The first one is AJG. AJG. Today is December 2nd, 2025, and the market has not opened yet. Yesterday, the market closed on red. The price at the end of the day was lower than the price in the morning when the market opened. When you look at AJG, we have our trend lines. More precisely, I like to call them valley line, passing by the higher lows at the bottom of the chart or the mountain that the chart is drawing by swinging around, and we like to buy around that valley line or either one of those two. Currently, it pulled back all the way down and it seems to be going a little bit lower. Excuse me. So we can look at it and see what it's doing. It seems to be going sideways here. We have a little bit of higher lows here, and then it pulled back and it's going sideways. The thing is around this support line here. When we start seeing some higher lows from here, if you like these stocks, you can buy some shares. Another things we can look at as well is we can look at maximum monthly chart to see if there is another valley line that there is a chance it might go to. We do have this one, and we don't know if it's going to go to it. So this one is about 6 years old or so. We have the date on the x-axis from the past to the present, and the price on the y-axis from 0 up. 1, 2, 3, 4, 5, about 6 years. So, and we have a sharp growth here. So there is a chance it might come down here. Therefore, if you have a specific dollar amount you want to spend, you might decide to buy allocate half of that budget to buy around this support line, and then if it comes back down here, you can allocate another half. That's one way. Or you can wait to start seeing it going up from here, have some higher lows, few higher lows before you buy, just to have a confirmation that it's down, going down, just in case it continue going down and go lower. Having this sharp growth though, my feeling is it might come down here. However, if we go back to maximum daily chart, we are seeing an arrow here. Where we put arrows are arrows facing upward are where we purchase, and arrows facing down are where we sold. We purchased it there, we sold it there, and when it pulled back to this valley line and start going up from there, we purchased it some more. You see, we saw few higher lows there and we purchased it some more, but it was not enough. It pulled back to this support line and went below it, start going up and pull back again. So even waiting for few higher lows confirmation before you enter the trade may not be enough. So you can see that we have some higher lows. This is higher than this one, which is about the same as this one, which is higher than that one, higher than this one, and higher than. So we have multiple higher lows there within the same pattern, the same direction, going upward. Before we buy, we purchase, but it pulled back and we are now worried about it. You can see the growth in that stock, so it's going to come up at some point. The thing is, we might decide to buy some more if we want to, since it's at a lower price compared to where we purchased it, and just let it be. So that is pretty much how you analyze your stocks and to find entries without fancy tools or any hype. So We purchased this one. Currently we are negative in it and we are fine. We are now going to sell it at a loss for anything, and we purchased it before and sold it before. So let's see here. So we purchased it, the one that we purchased and sold, we purchased it at 308 and we in December 2024, and we sold it 2 months later or so for $3.19 a share, and that was $10 profit per share or $82 total, and that was 3% return there. And we purchased it again in September for $305, and we have not sold it yet. So the second one is AME. Yes, what do you want? So AME, we have our trillions that we like to buy. We have this one and we have this one. So currently, if you are looking at where the price is to where the highest, the new high is closer to it than it's closer to the value line. It pulled back and start going up from there. Yesterday the price dropped as well. So when we are looking at AME, we purchased it somewhere here, you know, when it pulled back below this support line and start going up from there. We purchased it some more, but we just felt like this is a little bit higher up. So when it reached that new high, we sold it. We might have a little bit of profit there. We sold it there. So currently, you know, it's a little bit far from that value line, but there is this one that there is a chance it might go to. So just like the way the other one is, this one has a sharp growth to it as well. So we are thinking maybe it might come down to this value line, and if it comes down to it, we might buy some more. This one went in a little bit, but we are fine. So therefore we are waiting on it. And again, that is one that that we purchased and sold already. That will be AME. So we purchased it, in fact, twice. So we purchased it before, probably at a higher price in 2024 for $195, and we purchased it again in September for $188 a share, and we sold both in November last month for $197 per share, and we made about 400 cc profits, and that was $9 profit per share for one, and the first one we purchased was about $1 profit per share. So we have that. So let's go back and take a look at it. So yeah, we purchased it somewhere there, it went up a little bit and then pulled back on us. So we just kept in our portfolio until it came back down to this value line and start going up from there, and we bought it again. And when it reached a new high here where we are positive in both purchases, we sold it to lock it in, because when it pull backs, there is a chance we might be negative in the first purchase. So we just sold it and get out of it, just in case it's down with this support line and we decided to come down. So this swing trading strategy consists of you finding what you consider being the valley of the chart or the valley of the mountains that the chart is drawing, and decided you might find a few and decided which one you are comfortable buying at, with the assumption that you will sell it after a new high is reached. And if you have multiple valleys and you purchase it at one, when the price pull back there and start going up from there, you purchase it there and it reversed and went back down to touch base with another value line, you might decide to buy some more. So you might be decided to split your budget in two so that you can buy it at different stages like that if you have multiple value lines and you are not sure which one is going to use. So the problem is to be able to distinguish the support line supporting the upside wall of the mountain and the value line, because sometimes they might be going higher and higher for more than a year, making that support line supporting the upside wall of the mountain that they are claiming look like a valley line. But it's so, for some of them it can be so sharp that it just does not make sense to me for a valley line to be that steep. So therefore you might have to just look at the chart and make those assumptions, looking at it and critically analyzing the chart, and just use your common sense and make those assumptions, deduction from it, because you are trying to understand the puzzle that the chart is putting together to see if you can understand the direction it's going. Is it continue climbing up, pulling back to rest on the support line supporting the mountain is claiming, or is it down climbing up and is on its way down to the valley? So those are things you might have to decide. So this is stepping on it and going higher up and so forth, and I feel like this could well be supporting the mountain is claiming. It may not be a valley line for long up to long swing trading strategy. It might be for a short up to long swing trading strategy, but not for a long up to long swing trading strategy. And I could be wrong. It could well be the new valley line. But those are things you have to have in the back of your mind, so that if this is not the valley line, at some point you will be done with it and try to pull back lower to what it considers being its valley line, and start going up again from there, end the cycle and start a new one at the valley line. So another one, AMP, is one we purchased, we have not sold it yet. So again, today is not a buy for AME. It's more just to keep an eye on it to see what it's doing. So AMP, yesterday the price went up. We have a green bar, so that means the price at the end of the day was higher than the price in the morning when the markets open. So, and as we look at it, is around the valley line. So therefore we are going to go and look at it. So we have higher lows here, 3 actually. This red one, the bottom of it is higher than this red one bottoms, which is higher than this one. So we have 3 higher lows. Yesterday was a green bar. Today is a buy for AMP if you want to buy. But just keep in mind, like everything else, it might decide that it's not ready to start going up here and pull back. We purchase it somewhere here, right around the valley. At Zibin, we have some higher lows here, and then a pull back to the valley line, and I'm trying to practice if I can buy around my valley line without even waiting for a higher lows there, and just buy, because after all, when I'm waiting for higher lows, I might pay a higher price for it. So that is something I'm trying to work on, to compare it to how I've been doing it. Instead of waiting for a few higher lows to buy, just to have a confirmation that it's done going down and it start going up, which sometimes it will do that and then it will turn around and go down anyway. We saw it with AJG. So what would be the point? That is my analogy here, and I will say, you know what, if I wanted to buy at this valley line, when it touch base with it, I will buy some and see what will happen. So it's okay to be comfortable taking those risks within reason and learn from it. So I purchased it here. So far, I pay a price that is lower than what it is now. We are going to just keep observing it. So it's still in the buying range here. So we can go, when I'm looking though here, I'm not seeing any valley line underneath it. And it reached a new high earlier this year, and for the whole time it pulled back to this valley line, went up and pulled back again, and I have a feel like it could well be getting ready to start going up. So it ended this cycle, in my opinion, that originated from here. It ended somewhere here and it's getting ready to start a new one. So I didn't buy here. The price here will be lower. I was aiming to buy somewhere here, but I was not sure. We are seeing higher lows here. So I was not sure if it's going to remain here, if it's going to pull back. But guess what? It pulled back down here. So if I purchase it anywhere here, I'll be paying some price pretty much a little bit higher than what I pay here for it. And this price here is lower than here because the value line here is kind of tilted upward, which is what we want. So even if you purchase it here and it went up, you didn't sell it because you are waiting for that to reach a new high first, and the pullback, you will still have some profit in it because the price here is higher than the price corresponding to this area. You'll just have lost this profit here away from the value line. We can go to maximum monthly chart to see if we don't have any other value line at the bottom other than this one. So I just feel like it's been respecting this for a while now, that I don't think it's going to come down here. So this could be the value line, so therefore I'm okay buying it there. That was the assumption behind my buying decision, because I didn't really see any other, and I feel like this is too low for it to come down to it. Yeah, so again, that was the assumption here, and we bought it, and so far we are okay with that purchase because we are positive in this one. And again, it is still in the buying decision if you want to buy some share, but don't take my word for it. Just know that there is a chance it might come down lower, but it's an upward stocks, a growth stocks, it will come up. We bought it last year somewhere there and we sold it there, so we can go and check how much money we made on that one. So AMP will be this one. So we purchased it in December for $5.50 a share, and we sold it a month. No, we sold it, yeah, a month later for $5.60 a share. So $10, about $9.75 a share profit, a share, or $97 profit in that one. And then we bought it again in November this year, and we have not sold it yet. So, and we only bought what, 2 shares for $4.47 each. So because going into 2026, I like to allocate about $1,000 per trade, and I start practicing it now. And this concludes today's analysis, and you can see how we make entry decisions without any fancy tools, just using our charts and value lines and keeping our all-time new high price in mind to sell. If you want to sell right after it reached that, or stay longer in the trade past that, depending on how it did it in the past. Thank you so much for watching our videos. We thank you very much for your time, and thank you for all your comments. We thank you very much for subscribing to our channel. I'm Afiavi, Liberman Liberman Consulting L.L.C YouTube channel, and NinaSoap.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We have a workshop that we are organizing, and the next one is Saturday, December 6th. Will you please check it out if you are interested? Thank you for your time. For more of our swing trading tips, will you please check the playlist in the description of this video. Thank you.